Hello, this is Brian Shannon from AlphaTrends.net. Today is Monday, the 8th of September, 2008, and the market's closed. We had more amazing volatility here from this market. Obviously, I'm not going to repeat the news to you here, but the Fed intervened in the GSEs, and we saw a very positive response from the S&P 500. The S&P 500 got crushed last week, and then today it gapped significantly higher and was able to close back above that 50-day moving average. So we've got, again, a very volatile market here. Now we have to raise the question of, is this just a big trap in here, these 2 days of sell-off from last Thursday and last Friday? Because now we're back into that range that was aggravating us for a while in here, which was basically 126.5 to that 130.5 area. So when we take a look at the 30-minute time frame, you can see that we definitely got back above and closed above that level here just in the last half hour. We got another push higher that brought us back above there on a closing basis. So this prior support, we gapped up above it this morning, and then looking at the 1 minute time frame, you can see that initial strength was met with some selling, a lot of profit taking, I think, in there from people or just some people looking to break even, basically. But late in the afternoon, what we saw was a series of these lower highs in here, higher lows rather. And then we had seen resistance right at this level, at that 126.5 level, also which was coincident with this daily VWAP. When the market was able to push above there, that's when the buyers took control really officially for the day, because it had made this higher high in here with a higher low below it, and now the buyers are back in control here on the very short term. The problem is we still remain in a very dangerous market condition. The volatility remains very large, obviously. You have to look, though, from failed moves often come fast moves. Maybe we're going to get a continued push higher, but we're back just into this range here, and we've still got a lot of mixed messages from this market, as we'll see in a minute when we look at the NASDAQ. But the S&P 500 clearly looks like it dodged a bullet in here for now. And, there's going to be a lot of people saying that was it, that was the bottom. And in hindsight, some of them will prove to be correct. Let's just take it a little bit slower than that. Rather than declaring a bottom, let's focus on what we can control, which is only risk management. Because anyone who expected this type of sell-off last week and then this type of recovery on Monday, besides after reading the news on Friday afternoon, I think that those people were very few and far between. We do have a declining 5-day moving average, so I think that after expending as much energy on the upside as it did today, maybe a little bit further testing of this 126.5 level would actually be a good thing for this market. And obviously, it's the financials that are the big news group that led to this move higher. But realistically, we're just back up to the top end of this range that we've been in this market, which is defined by the support at 1975 up to the resistance that we've seen up near 23. It's interesting also that this was the only group of the ones that I put on my blog each day that was up last week, and it was showing some resilience to the overall market. A lot of people would believe some kind of conspiracy theory that it shows that the news leaks, and often it does. But if you just focus on price action, you can see that this market, the financials, has been behaving a lot better than the S&P 500 overall. And even when it broke down, it recovered quickly late last week, as maybe some people were betting on a leak in that news or whatever. But the financials, I still think that basically overall they're neutral. If you were long this group and you got involved, I think it was smart to probably take profits today if that's what you did. But even in this group, the buyers did come back in late in the day. So on balance, the buyers were in control in the financials as this group closed above its now rising daily VWAP in there. So pretty impressive action, and when they catch a lot of people off guard, it tends to exaggerate the moves because there's a lot more emotion in the market, and from emotional movement becomes quick movement, and that's why you have to be very cautious and patient. Pick your spots and manage risk. The Russell 2000 we had been testing this 50-day moving average here a couple times last week and holding holding, we're close to holding that 72 level. It came close to it Friday, closed below it, but here we have another recovery. We've still got what's looking like a recovery, but we've still got this pattern of lower highs and lower lows. We still need to clear this much bigger, more important level at $76 a share. Until we can clear that $76 level, these are just bounces within a more neutral market in here. And that's what these moving averages crossing back and forth are showing us, is that there's a lot more, indirection in here, and that's why you have to focus on the shorter term time frames and, again, manage risk. Same pattern in here was present on the IWM. This is something I had pointed out on my blog as well, probably about with an hour and a half to go on the NASDAQ 100. That was that these markets were coming up to resistance and showing these, well, not this one, but the S&P 500 and the NASDAQ were showing higher lows, and I had purchased some call options. I'll take a look at that in a moment. But the Russell 2000 back into a more neutral type range, and still the jury's out on whether this thing can really push back above that 76 level. Don't get all excited about one day's activity. Look at it in the broader picture. The broader picture is we're still doing battle with this much bigger level. The semiconductors today were semiconductors were up 0.3%. Still, obviously, a badly damaged market. They got deeply sold off last week, and a little bit of a recovery rally is generally to be expected in a group like this. But look at where this market opened today, and obviously these prior lows in here, when the people who were stuck long saw that, or maybe new shorts got involved, support broken tends to act as resistance, because a lot of trapped long players are looking to break even, shorts defend their positions, and that sort of thing. But this market backed off that prior support at 27 and a quarter or so, and looking at the 30-minute time frame, you can see that's where that level is right in here, about 27 and a quarter. And this group is searching for some support in here. We've still got a declining 5-day moving average in this and most of these markets, so you have to be very cautious. If they don't scare you out, they'll typically wear you out. Perhaps you can get a bounce out of these things, but still, we've got that declining 5-day moving average. You want to see that come down, flatten out. We want to see the volatility creep out of this, kind of like the bouncing ball explanation that I had outlined in my book. And again, that's only available at technicalanalysisbook.com. I haven't mentioned that on the videos too often, but technicalanalysisbook.com is where you can purchase the book that makes the sense of all these videos that I do. And let's finally take a look at the NASDAQ 100. The NASDAQ was down 14 cents. We've obviously got this level of prior support in this area near about 44 and a quarter, where the market gapped up to and then sold off from. But as I pointed out on the blog during the day, we had seen a divergence between the moving average convergence-divergence oscillator. That's this red oscillator down here. So what we'd seen in here is the market made a lower low, but at the same time, the MACD made a higher low, indicating that the selling pressure wasn't quite as strong, even though we made a lower low. So we had a lower low, but there wasn't as much panic or emotion. And a lot of times when that happens, it clears the way for at least a short-term rally. So I pointed that out, and I'd also been pointing out the 1-minute VWAP, saying that it needed to clear this 43.40 level. And that over in here, I was long some calls in here. My stop at the time was going to be under there, and I was raising my stop in a subsequent post at alphatrends.net right here. I'm still long some calls. It's not a big position. We've got a clearly broken market here, and the odds do not favor long positions. I'm betting against the primary trend. I'm betting against the intermediate term trend. But if we can get a bounce up towards this 5-day moving average, it will make for a nice trade. And by being long the call options, my risk is absolutely defined. Whereas if I instead bought, let's say, 1,000 shares of the Qs at 43.30, maybe these things open at $42, and I'd be out the premium in there. If I was long the calls at 92 cents, the most I could ever lose is $920, even if it gaps down $5. Other people like to play the QLD, which is the double long Qs, and I don't think that you want leverage to the upside in this type of market. But the Nasdaq is still clearly the weaker market in here, and those semiconductors are really going to have to get back above and hold above that 27 and a quarter level before I think we can have really any faith in an attempted rally attempt.